insider trading. So today in my presentation, I will cover about 20 minutes of the time. And right now, why don't we just dive into it? I will share my screen. And along the way, if you have some questions, please feel free to fire off those questions into the Q&A below at the Zoom. We'll be tackling some of those questions because after 20 minutes of my presentation, we'll be inviting Samson Lee to come on board to share his point of views as well. Thereafter, at around 40 minutes from right now, we're going to start our panel discussion. I'll be exchanging views with Samson Lee, and we also be taking some of the questions from the audience itself. All right, so everybody all ready? And let's get started. I'm going to, first thing first, switch over to my slides right here. The concept of regulation in fintech actually boils down to one keyword called wealth. Everybody is looking for wealth, seeking for wealth, and this is the area that we are specialists in. So for a start, a quick check. My background, I've been investing in the market for more than 20 years, and the kind of experience I bring forth to today's discussion is to give a deeper insights, exactly to know what exactly is insider trading and why the Davids of the world are constantly in battle with the Goliaths of the world. With that note, I want to share with you my background. I'm trained as a civil engineer from Singapore, Nanyang Technological University. I completed my MBA in University of Louisville. And at the MBA program, I launched my very first business. I'm into different kinds of business over the past 20 years. I also completed my PhD at University of Canberra. And right now, I'm still back to school. I'm a student at Harvard Business School on part of the OPM program, of which I'll graduate in 2023. Now, today, I want to share with you about seeking wealth and what has this got to do with RegTech, Fintech, and all that stuff. There are many instruments that we can pursue wealth. And I want to share with you, there are 4 key areas that I think worth your while and worth your time to review them. First of all, let's talk about properties. In fact, just this morning, I just bought 2 units of properties in Singapore. Properties right now is booming. Everybody is waiting for the recovery of the pandemic. And more importantly, there's so much stimulus money coming downstream to the ordinary folks. And everyone is waiting for the big rebound. And that's the reason why Bloomberg just released an article today that Asia is booming in properties, especially in Singapore. Second area is stocks and options. And can you imagine for Joe Biden just stepping in office for 100 days, he has already approved 1 major stimulus and 2 more stimulus on the pipeline. And we did a study in comparison to what Obama did back in 2008 financial crisis versus what Joe Biden is doing right now. This is mind-blowing, the amount of money coming on stream that's pushing the market up. That's the reason why Dow Jones is all-time high. Next on the bottom left, we're looking at digital businesses. And that's the reason why all the major technologies is always ending on with a tech, whether it's a fintech, regtech, or edutech. And I want to encourage you, you got to jump into technology business. And finally, on the bottom right, today we are looking at Bitcoin dropping by more than 10%. And is Bitcoin worth your while to invest? And is it part of the game for hanging on for dear life, otherwise known as hodl? So while you're pursuing wealth, at the same time, I do not wish you to forget about those that are underprivileged. And thereby, I think all of us have an important role to contribute to different areas, whether in the area of poverty, area of children, area of developing world entrepreneurs like Kiva. And these are the things that you can think about and start to spark some ideas. So let me take you through the journey of what the stock market is all about and how does this relate to the insiders. Now, if we take a close look over here during the tour of the presidency of George W. Bush, holy moly, 8 years of his tenure, we went into all kinds of trouble, 9/11, 2001, 2003 invasion of Iraq, and then we have a major financial crisis in 2008. By the time he passed on the baton to Barack Obama, which handed the reins for another 8 years, this is like all-time 45 degrees up and away. Why? The question is solved by one simple solution known as QE, quantitative easing. And with the flood of money, the market goes all the way up. And then he handed over the reign to presidency of Donald Trump. 4 years, we went into all kinds of mess, started with the US-China trade war, and finally last year, kickstart the pandemic. But you can see over here, the pandemic recovered really fast with what we call a V-shaped recovery. And right now, as we speak, Dow Jones is an all-time high, while the world is still fighting against the pandemic. What's going on? So with that in mind, the challenge is the next 10 years, what's to come? And I put over here is quite interesting because there are studies right now on Wall Street that says, hey, perhaps China is going to become the superpower number one by the time we hit 2029. And how about your thoughts? What will be the price of Bitcoin by then? And all these are really tickling our mind. And we say, hey, we got to put a clear check right now and making sure the infrastructure is ready for such a decade of boom. Or are we going for a doom? Here we go. So I want to check this out with you because we formulated quite a number of ideas from the instruments that you should invest in, from all the different areas of timing the market on a 1 day, 1 month, 1 quarter. And we even look at the ideas of greatest of all time. And this is what we are believed to be serving for the next 5 years that will move the market really, really aggressive. From the idea of 5G, all the way to the idea of electric vehicle, all the way to the idea of semiconductor chips, all the way to pharmaceutical drugs. And these are the things that's moving the market. And of course, right now, the hot topic at this moment of the day, we are looking at Coinbase just IPO'd recently, and Binance just tokenized stocks in the US recently as well. And this has everything to do with the topic of what we're discussing here today. I also have this interesting image called YOLO, you only live once. And that's something for us to think about. Is Bitcoin perhaps a worthwhile asset for us to consider hanging on out there? And finally, we arrived the year 2030. That will be the launch of the 6G network. And so many things to think about, but the key ideas has always started from here. Watch very closely right now in this chart because this price of the chart spiked up 200% in 1 day. Here we go. If you enter before the spike, it was trading at $15. And right after the spike in 1 day, it shot up to $45. Profit return 200% in 1 day. Now, what does that tell us? Hey, perhaps, you know what? There are so many insiders playing this game, and are they playing the right way or the wrong way? And how do retail investors like ordinary folks out there like us, how do we benefit from such a price information move? This is worthwhile for us to think about. And thereby, for my company, we built 6 great products to tackle this question of how do we capture the spikes before they happen. That is the heart of our research here at Spiking. We are a combination of Fintech as well as EduTech. So I want to take you through right now this journey. The best of the best out there, we call them the top 100. And of course, right on top of the list, we have Warren Buffett. And it is interesting, the amount of technology available to us right now because we are able to know every single buy-sell transaction of the top best money managers in the world. Take, for example, case in point right here. Warren Buffett has an AUM, asset under management, of $263 billion. And anytime he takes on a passive activist role or even anomaly trades, we will know on the instant, on the fly. Another great trader out there, James Simmons, mathematician. And guess what? He's handling a portfolio of $94 billion. We need to know what he's investing today because his good friend happens to be the richest man in Hong Kong, Li Ka-shing. And from our technology, we spotted that, hey, they went in together to buy up the stock price of Zoom. And they made like more than 100% profit return. So something for us to think about. And this is the man, if we want to talk about technology, we want to talk about regulation and all that stuff. He was recently invited to the Congress investigation into GameStop. Why? Because every major brokerage houses in the world have to pass through the godfather of all time. We call it the Citadel, the prime brokers of all the brokers. All right. So this is the reason why we need to know what exactly they are doing as a firm and which companies are they investing right now today. And from this quick introduction, I want to give you a feel, the kind of market we are looking at is so buoyant and so volatile. And we are looking at 82.6% spike in one day, 68.9% spike in one day. And right over here, this is like 48.5 spike percent in one day. And it's like every day, this is what the US market is offering us right now. And right now it's zooming into February month, again, like 221% spike in one day, 178% spike in one day. And that's why technology is the key for the Davies of the world to play the game together with the Goliath, all right? And I can keep showing you all this data, but end of the day, what's really important for us to think about is this. Does technology, is it going to help us find the next spike? And I put forward an interesting question like this. Look at the kind of data that we have today. We are able to look across board. I'm looking at 4 stocks in front of me. And straight away, we put on our lenses to understand about insider trading. And you can see right on the center row in green, we are able to put together the net positive purchase of every insider in the market. Case in point, Concentrix Corporation, ticker symbol CNXC. They got a net positive purchase of 3.7 billion. Now, what does that mean? In a single quarter, there are insiders comprising of sovereign wealth funds, the big funds like the BlackRock, State Street, and the Vanguard, the billionaires and the millionaires all entering the market. Some they are going to buy, some they are going to sell. But if we can take out the net effect of the purchases, here you go, net positive purchase 3.7 billion. That's the kind of data we have right now to give us a sense and feeling, hey, where are the hot money going to? And perhaps we got to take a step back and understand why are they putting so much money into these stocks? And that's the reason why, case in point, in 2020, stock volume were all-time high. My goodness, everybody is flooding the market. Perhaps they are locked down at home, can't do much. So everybody is trading. This year, another record. And that's the reason why it is even more critical. We have to identify the right technology to help us to play the game wisely. So here over, again, a second example, we're looking at Eli Lilly. They attracted a net positive purchase of 7.8 billion squeezed within a 3-month period. And that was a Q4, October, November, December. That's the amount of money entering into a single stock. Because why? Perhaps they're going to have a major drug discovery and FDA is about to give approval for their drug. Those are the issues that we need to think about. And not only here, we are looking at all the different timeline of activities. What's the pipeline? They have a F1 clinical, phase 1 clinical trial, phase 2 clinical trial, phase 3 clinical trial, PDUFA dates and all that. And again, what's the perspective? We are putting technology in play so that we can find all these great companies. Case in point right here. The world is right now in global shortage of semiconductor chips. And you're looking at a great company right here called Micron. Micron attracted a net positive purchase of $1.1 billion just for Q4 alone. And that is a telltale sign that the smart money can sniff out such a great deal. They check out the pipeline and they know, oh, perhaps this guy is going to move really aggressive. And how about Carnival Corp? They are waiting for the pandemic to pass through and people start taking cruises again. And how about this company, Charles Schwab? The millennials, the Gen Z, the boomers, the Gen X, everybody is coming on stream right now to trade. So they are profiting so much. They got the best earnings ever declared. And looking at all the banks last week, Morgan Stanley, Citigroup, they are all beating earnings like hell. So this is what I'm talking about. So I'm going to skip some of these slides here. And I'm just going to zoom up. I'm coming to the last 2 minutes of my presentation. And this is where I think I want to slow down a little bit and to show you the timeline. There's some important timeline right here. 2021 is the year of the stimulus, as we know. But something that's really going to transform the landscape next year, that's in 2022. It is not the Beijing Winter Olympics. It is more about Beijing launching digital yuan to the sporting athletes of the world, including the sporting officials of the world, so that they get acquainted what it means to carry a digital wallet and what it means to have digital yuan in their wallet for them to buy products and services. This is going to be a major launch campaign. I believe what Beijing is going to do in the Winter Olympics, February next year. By the time we reach 2023, that will be a full year. I believe they'll have fully deployed in all cities in China, and every Chinese will be having the digital wallet to have the digital yuan inside the wallet. 2024, fast forward, that will be the next election coming up. And our bets are on Joe Biden probably having a second run, just like his predecessor, Barack Obama. He has the same playbook. And in fact, he multiplied the same playbook from Barack Obama. He quadrupled the amount of stimulus passing on to the market today. 2025, 2026, that's the next 4 to 5 years. We believe there will be a major burst for 5G, for semiconductor chips, for pharmaceutical drugs to be more efficient in getting approvals, for electric vehicles, because in China, 25% of the cars sold annually must be an electric vehicle from 2025 onwards. And there'll be more IPOs, more specs coming on stream. By the time we hit 2028, that will be the next election. Everybody's guess who'll be running for it. Fresh candidate from Republicans, fresh candidate from the Democrats. And finally, we believe that in 2029, that's the year of China. The Wall Street is saying that they're going to be number one. Take the word from them. And 2030, we arrive at the 6G network. So I'm done on my sharing right now. Thank you so much for paying attention to my sharing. And I shall right now take the privilege to introduce our next speaker. And that's none other than Samson Lee. Samson, your take right now. Thank you.
Hi, thank you, Clement. Wow, what an interesting insight into the future. Thank you so much. Very exciting presentation that you were sharing. Okay, so this make what I'm going to talk about somewhat less interesting and less exciting, right? So I'm going to talk about, let me see if I can share my screen. The STO space that is being talked about a lot recently during the crypto boom was the next big thing. So let me see if I can pull up my full screen here. All right, just 1 second. Okay, great. Can you see my screen?
Yes.
All right, excellent. Well, first of all, thank you for Asian Digital Week 2021 organizer inviting me. It's a great pleasure to be here. So today I'm going to talk about STO from a business perspective. So I'm Sam Lee, the founder and CEO of Construct Partners. Construct Partners is an award-winning AI-powered global decentralized investment banking group. And we are also a financial service asset management firm for tokenized asset and digitized securities. We have very blessed to won some of the awards previously. So basically, we're doing 5 things. Token finance consultancy, digital asset management, media and community, and also provide technology solution for asset tokenization and DeFi DLT space. We run one of the largest online private placement roadshows. It's called GORE. If you're interested, you can find us on Google. It's pretty easy to search us. And we also organized the world's first annual international awards for tokenized asset and digitized securities called the TARTS Awards. If you're interested more about STO, feel free to go to our website and download a digital asset tokenization guide. It's free. Okay, so back to our topics today. STO. So first of all, there is still a lot of confusion on the market, right? Because people talk about different terms, ICO, IEO, STO. So I hope I can give one slide to clear all the confusion, right? First of all, it's all about blockchain, right? Blockchain is the underlying protocol of all the exciting things we have seen. In my personal opinion, like people actually talk about blockchain too much. I don't think we need to know that much about blockchain because it's very low level. Just like we're using video every day, nobody really cares about the video codec, right? MPEG-2, MPEG-4, H.264, H.265, we just watch the video. We are using internet and email every day, and who cares about the protocol TCP/IP? Blockchain is the same. But based on the blockchain protocol, you can say we have two paths. One is the decentralized application, the DApps. It is the field of IT, right? It meant to increase productivities of enterprise. It's just that some smart people, they issue also a token based on the DApp and what we call those are utility tokens. This is what we have seen during the ICO days 2 years ago. But what we are talking about today is another path, which is completely separate, is DeFi, decentralized finance. It is the field of finance. It's about corporate finance, capital markets, security tradings. So this is about asset tokenization, security tokens, and digitized securities, right? What won during the 2017s because people using utility tokens act as a function, as a financial product for fundraising. So that's create all sort of issues. And of course, for the DeFi and security token space is about fully compliant securities activities. And just some key points about digital assets or STO, right? It is not about cryptocurrency ICO, it's about real world assets. It is fully compliant derivative or securities in digitized format using distributed ledger technology or blockchain. The process of creating such financial product is called asset tokenization. And the end product is tokenized asset, digitized securities, and tokenized securities, or security tokens. They're all the same. And the process of offering such financial investment product to investor are called security tokens offering. And these security tokens can also be traded on licensed security token exchange. They're all coming to life in different countries, right? For example, we have the first license issue in Hong Kong. I know they have maybe 3 licenses in Singapore now, 6 licenses in US, first license in UK. They're all coming online now. Well, this is a little outlook of the market future. Like I don't have the insight like claimants going into 2030. So this is a report forecasting until 2027. It's done by World Economic Forum and endorsed by Deloitte and McKinsey. It said the market size for tokenized asset market will exceed 24 trillion by 2027. As you can see, we are right at the start now in 2021, and there are a lot of growth in the future. So if you ever wonder whether you will be late to the game, like, don't worry at all. We are right at the start. So is this all just about hypes, or is this happening, right? So let me give you some real market data. It is actually happening, right? There's a lot of big players already implementing security tokens in different formats. For example, some of the largest banks in US, Wells Fargo, JP Morgan, they're all issuing their own stable coin now. And if we look around the world, it's not lacking of major financial institute issuing security tokens in different formats, such as tokenizing real estate, tokenizing bonds and debts, also tokenizing funds, and tokenizing treasury bills, right? And one interesting example is that one of the leading rating agents for traditional bonds, Morningstar, they already launched the first rating product for tokenized debts, right? So we see the whole value chain is coming into place. If we look further, we can find a lot more examples from the government, public organization, financial institution. They all starting different form of trial of issuing digitized securities in different countries. If we look at the global, so this is about, Yes. If we talk about ICO days, right, we know in the US, the regulator SEC is very against it. Even as of today, from time to time, we might notice, there are some news that SEC is still going after and suing different ICO projects for illegal fundraising. But for the STO space, US is actually leading the game, as you can see in this picture. They issue almost half of the STOs issued from US. And if we look broader on the global regulatory space, different countries, although they're at different pace, but they all moving forward very positively towards developing STO market and ecosystem. So it's really positive on a macro scale. Okay, so if we look at some of the recent news, right, in SEC in US, they already approved stablecoin can be a deposit in commercial banks. One of the early days crypto exchange actually got a bank license in US, and the US Treasury Secretary comment like digital dollar, right, as well. We talk about digital RMB, Clement mentioned it, but I think US is catching up as well. Some of the largest funds, they advance very aggressively coming in with Bitcoin funds, and some of the largest financial institution from Japan, which traditionally is very conservative market. Their leaders, SBI, for example, is also very aggressively moving into the space. And if we look at the border space, over 15 countries now have a defined regulatory framework for blockchain-based security tokens. So what's happening in this space is very hot now. If we look at the product itself, there are a lot of value and advantage for digitized securities or STO, right? I'm sure you can find all this information online, so I'm not going to go into details. But in general, they are very solid value proposition to both the issuers of the securities and also the investors. So from here, I'd like to dive in a little bit more about the different perspective for the issuer and the investors. For the issuers, this is the typical fundraising life cycle curve that you see, right? So normally it's starting from the left. Enterprise will come in, with a startup issuing, getting some money like as a conceptions, usually self-finance, and then they will go through the value of death. Some of them successful, survive and get the prototype out of the door. They will be able to get some angel investors, and then VC, and then different series round of fundings, and eventually hoping to have a trade sale, M&A, or IPO. But it's a long journey, right? So how the token financing can come and help in this journey? First of all, we talk about ICO, right? Like why ICO have so much failure before? Because very often ICO is focused on the early days of the life cycle, right? If you remember, some of those ICO projects is very early days. They don't have a business plan, or they might have a business plan, but they don't have a product yet. They don't have customer. It's all concept with a white paper. So it doesn't matter where they raise the fund, the chances of failure of that early stage of business is very high. For STO, we think the sweet spot is actually on the later round of fundings, maybe starting from Series A up to a PIPO, right? Is more focused on the growth round of fundings. From the investor point of view, this is a chart that shows the allocation of different asset class. As you can see, the largest proportion is still bond and debt. Not surprised, because a lot of corporate bonds, government bonds, right, having over $250 trillion. The second largest is real estate, 217 trillion, and then it's equities, right? So when we talk about all this stock trading, they actually only rank the third, around $74 trillion. And then cash, ETF, and the last digital asset, now we just surpassed 2 trillion. Although it's not a small number, but compared to the whole pie is just a tiny fraction. What's interesting here is, apart from the ETF being invented in Canada in 1990, digital asset is actually the first new asset class in 20 years. So when we talk about STO, first, I think in the immediate terms, we can see a lot of asset tokenization of existing assets, right? Like tokenizing bonds, debt, tokenizing real estate, tokenizing stock, and then create a digital version of such real world underlying asset. But I think moving forward, when people are more familiar with the concept, they understand how this works, I'm sure a lot of smart people will come up with new products that we have never seen today, right? We already starting to see, some signs. For example, traditional bonds, now they're hybrid product in a tokenized format, combining the unique nature of bonds, a fixed income product, but also an upside element of dividend sharing when the business is doing well, right? So that kind of hybrid product already happening in the tokenized space. And theoretically, we can tokenize anything, right? Because tokenization or security tokens, they actually just a form of derivative on top of an underlying asset. So we can tokenize ownership, such as ownership of fixed asset like real estate or equities, right? We can tokenize cash flow. So just, the revenue, the profit, the dividend. We can tokenize debt and also tokenize investment funds. The process of tokenization involves a lot of professional work. It may be like a trimmed down version of IPO process, right? So there are different steps and will involve different professional firms like law firm, the accounting firm, audit firm, trust company, brokerage firm, right? But very often we can look at it as the primary market during initial offering and also the secondary market on the post-offering secondary trading. Well, and it's not just all good. There are, of course, a lot of challenges and risk as well. The value chain is very fragmented as of today. Regulation, although is very positive moving forward, but there are a lot of inconsistent between countries as well. Some faster, some slower. The secondary trading is still low in liquidity, and it requires a lot of education in all fronts, like issuer, investor, regulators, and also traditional financial institution coming into this space, right? We also need to develop a lot more financial tracking, reporting, valuation, analysis tools. There are plenty in the traditional stock market equity space, but on the digital asset, it's just starting. As to wrap up, right, we are just right at the start. There's a lot of challenge in front of us, but this is just normal, right? It happened in all kind of industry transformation. If we think about like year 2000, when we talk about e-commerce, people at the time, they talk about online credit card fraud, they talk about, all this identity and like lower bandwidth, but, it's all will be solved, right? So, it's just a natural process. Huge opportunity ahead. My personal opinion, for those, I understand like some of you might be, younger, but for those of you who have experienced the internet boom back in the 2000, my example is we are almost like the 2003 of the internet wave. Why I say that? Because we came out from the crash, right? And the next big momentum just around the corner, which is STO in this case, right? In 2003, if you remember, it was smartphone. When smartphone came into the market, it changed everything. The cloud-based infrastructure, video streaming, app store, this is what's going to happen when STO really find to get on the wagon, which I think will happen this year. So another analogy, I think, YouTube could be a good example, because YouTube, it create liberalization of content. If you think about it, before, when a kid is playing toys at home, before when he make a video, he may just show to like 10, 20 friends and family in the village and the small town. But now all of a sudden they put online with a global audience. Boom, they got 20 million audience, right? Same. There are a lot of very interesting investment opportunity around the world, future unicorn, because the traditional infrastructure is not efficient for small entrepreneurs to do fundraising globally, but it will change with STO. Small opportunity entrepreneur can now access global investor. On the vice versa, global investor, they don't have to necessarily go through the traditional way of putting the money with the VC, with the the PE and lock the money for 10 years. They can invest into project directly through a fully compliant structure. So STO is going to liberalize investment industry. That's my personal view. So thank you very much. That's all for me for today. Thank you. Oh, Clement, I think you're mute.
Thank you so much, Samson, for sharing your insights in the STO. And straight off, we have audience firing off questions to us. And I want to encourage those of you who are watching in right now, start sending your questions to Zoom. At the bottom, there's a tab called Q&A. And I'm going to intermix between my questions. I'm the moderator for this panel right now. And first question I'd like to ask Samson is, he spoke about ICO and went in depth into STO, and that is where back in the 2017 era, people were raising money with a blank sheet of a white paper. And in this current era, we are talking about IPOs as well as SPAC, Special Purpose Acquisition Companies. So, Samson, can you give us a crystal clear differentiator between ICO, STO, IPO, and SPAC? These four instruments, we'd like to hear insights.
Okay, well, thank you. That's a very good question. So it could be complicated. I try to explain in a simple way, right? So basically, you can look at it as two dimensions, right? One dimension is different asset class, right? For ICO, the asset class is not securities. It is a right of entitlement of future good and service. You can look at it almost like a coupon, right? Because if you think about it, during ICO days, people buy the tokens. It gives them a right to entitle for a future product and service, maybe some business model like a right to vote, or so people just put a value on that right? Whether it's sensible to invest in it, and whether it's reasonable price, that's a different question. But that's the asset class. For STO is about securities, financial products. So that's why it's highly regulated. It's just like stock and bonds today, right? So that's one dimension. The second dimension is how they raise fund, right? Like whether they're raising it for like a closed network private placement, whether it's purely online crowdfunding or full a SPAC structure or IPO or private placement. So that's a different aspect. Of course, some of the method of fundraising is being regulated and some are not, right? So I guess we can look at it that way. But I still a believer of utility token as well. I think it's just being abused and used in the wrong way. Right? I think for startup early project, it's actually better for them to do an ICO, or I would call it a UTO, a utility token offer, right? Because ICO is too negative. But because if you think about it, it is a method of crowdfunding, right? Getting your believer, right, come in and supporting the vision of the founder or an entrepreneur. Is a prepay of good and service. Right, so I really like this. Like, for example, someone is making a new phone. I really like the concept. I will put in a pre-order. Right, I give you the money first. Give me the phone in the future when it's ready. So there's nothing wrong with that. Right. What ran wrong before is because people took the money, they never implement the business plan, product never launched, and they just didn't deliver the business plan. Right. But such mechanism is not wrong, But of course, it should be done in a manageable way. I mean, for example, for people raising a seed funding of like 300 grand, 500 grand is absolutely okay, not $50 million, right?
Yeah. So that's a great point. Basically, what we can sum up from Samson's sharing is he highlighted earlier just now as well the concept of liquidity. So if you want to look into ICO, STO, at this moment, STO may not be as liquid as what we expect it to be in comparison to the public market like an IPO or SPAC. So thereby bring up the audience question from Reko Todev. He's asking about legal insider trading. And this is the area I think I can contribute to the discourse. Legal insider trading means somebody officially announced to the world, I've taken a position in the particular stock. And he has to inform the public. Now, that's 100% legit. And if you act on this information, nothing goes wrong. The problem is many of them, the illegal insiders, they will act on privileged information that's not disclosed to the world and profit from the privileged information. Now, that's illegal insider trading. So thereby leading to what Samson has shared as well. If you are looking at STOs, Samson, you brought up about Asia and you coming from Hong Kong, very near to China. And recently an article just popped right out from South China Morning Post, whereby Binance as a crypto exchange for the first time in the world has tokenized a stock that's trading on New York Stock Exchange. And that is Tesla as well as Coinbase. What are your views on that, Samson?
Right, that's a very exciting news, I think, right? But we can also see a lot of things in this news, right? Well, first of all, by the way, this is not a new concept, right? For those of you who are already involved with the industry and the community, if someone still remember this company called LA Tokens. LA Token, when they launched in 2017, they already launched a token that is backed by Apple shares, right? But at the time is of course totally wrong because that was a utility token.
Yeah.
So this tells us, even as of today, that Binance is launching such security tokens. And I think they probably make some news announcement online that is also available for Hong Kong investors, right?
Yes.
But well, first of all, there's no approval in Hong Kong, right? This is not nothing approved from Hong Kong, right? But looking at that, like with a company as resourceful as Binance, and I'm sure they have all the best lawyer behind them, they make such mistake. I think it's a mistake. I don't think they purposely try to.
Maybe this is the point, Samson. I have to bring in one of our audience. Eva Toms is asking you, what are the most popular platforms for issuing tokens? And what should have Binance done correctly, making use of an official platform rather than right now, no one knows which jurisdiction is he actually talking about when he tokenized the two stocks.
Right. Okay. So this is, a convergence between the traditional finance and digital asset, right? I think Binance being the background, they're very used to online, globally, but not used to the traditional compliance framework, right? But when we talk about securities, it has to go to the traditional compliance framework. So that's the fragment industry I mentioned, right? So every country, they have their own security laws. So how do you do a global placement, right? Truly global, targeting like 50 countries and be compliant with 50 countries' security laws, right? This is a big question, right?
So I believe the good news coming out from this discussion is that, last week when Coinbase rang the bell on New York Stock Exchange, they have officially legitimized the whole concept about digital assets. I think this is really important, getting the acceptance from Securities Exchange Commission, one part of it. And also earlier on in your sharing, you mentioned about Morgan Stanley, BlackRock. These guys are all offering right now hot, as you mentioned, digital assets, but primarily with a focus on Bitcoin. And thereby, this question pops up. Right now, Bitcoin has broke below 48,000 per coin as we are speaking right now. I'm looking at the price, 47,888 to be exact. What is happening right now? Give us a sense.
Okay, so this actually tie into the Coinbase point you just raised. Okay, so for Coinbase, you're right. You know that they have made great achievement at the start, right? But once after they listed, if you watch some of the latest news, they actually got pulled down by a few exchange, right? So some of the exchange actually took them down after they launched, right? So this create another question mark whether it's fully compliant or fully legit, right? Although the asset class, Bitcoin, we all recognize is now a legit asset class, right?
Yes.
By most of the country, but the way money going into Bitcoin, is it fully compliant with the KYC AML requirement, right? For people who is now cashing in with the Bitcoin asset, where do they get the money from in the beginning, right? So there's a lot of questions there still. So that's why I think this is all, you know, related to each other. I think the fact that Coinbase being pulled down by a few exchange also give a second thought about the Bitcoin investment and the trigger, you know, because Bitcoin is not just crypto community now. It's Wall Street behind it. It's major fund, hedge funds, and you know this big company, they make money whether the price go up or go down. Right?
Yes.
So Bitcoin going down, don't think they're losing money. Some people make a lot of money.
And that's a very valid point. And since you are closer to home at China, Hong Kong being part of China, I need to ask you a very important question. And that is, recently, the China's central bank has a completely change of view. They have right now revealed on CNBC that Bitcoin is seen as an investment alternative. Tell us more about what's happening in China. Why is there a change of stance on Bitcoin?
Well, that's very interesting. Well, first of all, I don't know much about China. Like but I can share with you my personal view, because I don't want to be perceived as a party and then I got sanctioned. You know, it's very political now, right? It's very political now. Well, but what I can share with you on my personal view, right? I think the bigger threats in terms of currency to US dollar is not renminbi, it is Bitcoin. You think about it, right? Like a lot of the smaller country, right? They you know used to have US dollar as the reserve, right? Are they really going to change it to renminbi? You think about it, right? It's a big question mark. But some of them is actually accepting Bitcoin now.
Yes.
If I am US government, I will feel most threatened by Bitcoin, right? Who is the animal with their own life? Nobody can stop it unless you stop the whole internet. But even if you stop the internet of the earth, you know, Elon Musk may make another internet in the Mars and do mining on Mars, right? So and if nobody can stop Bitcoin and is work totally opposite of US dollar because nobody's printing money, right? For people holding Bitcoin, the world is not inflation to them. For people holding Bitcoin, I'm talking about long term, right? Forget about the speculation up and down.
Yes.
If you believe in Bitcoin, people holding Bitcoin, the whole world is on deflation to them. Right?
And that's riding on, you know, you have shared with us from the era of debt, decentralized application to DeFi, decentralized finance. And right now, even recently in Singapore, there's a buyer that bought the NFT art piece by a few $1 million. Now, going back to the point of Bitcoin, and you are spot on because Peter Thiel actually calls out Bitcoin and he calls it specifically a Chinese financial weapon. And that is about your discussion about whether is it the digital yuan, is it a real threat, or is Bitcoin the real threat? And right now it's open for discussion. And let me finish off with two more questions from the audience. Venya just asked us a question on how to achieve a balanced portfolio through the wealth trilogy. And, I want to encourage you, Venya, look at what Samson has shared today. Look at what I've shared today. It's a world filled with insiders, filled with digitalization. And right now we also have, moving forward, all these traditional financial players entering into this space. So what is really a balanced portfolio is to make an informed decision. And the second question from GP, why a security token? Why not debt or equity instead? Maybe Samson, you want to take on this last question from the audience?
Right. Well, security tokens, it just look at it as just a derivative, right? So this derivative can have any kind of underlying asset. It could be a security token of debt, a security token of equity, right? We can have different type of underlying asset. It could be commodity, and some kind of NFT token can be security tokens as well, right? If you think about, if you're collecting a piece of artwork that can pay an income, artwork actually generate rental income because they rent out artwork to different museum and get rent, right?
Yes.
So that could be, if you distribute such dividend, it could be a security token.
Wow. Thank you so much. It's come to the point in time. You know what? We are very, very honored to be invited by Asian Digital Week. Thank you so much for inviting
Likewise, yes.
Samson and myself. And thank you to all the audience who are tuning in. And please make sure you go back to the website. I believe the organizers will put up some of the videos for your viewing. And I shall officially hand over the time to our Angelova. Thank you so much, Samson. Thank you everyone for tuning in.
Thank you, Angelova. Thank you. Have a good day.
Mr. Lee, Dr. Chang, thank you so much for being here. Thank you for sharing your experience. And yes, we're going to share the recording with you after the whole panel and the whole conference is ending. Now we're going to have 15 minutes break, and we're going to proceed with the next panel, which is hybrid digital customer experience. There we'll have three panelists. So thank you very much, and don't forget that still we have today. You can also go to our Expo Center and see the stands of Neosoft, Tendric, TimeDix, and to talk live with their experts. Thank you. Hello, everyone, and welcome to the second panel of the Fintech and Digital Innovation Banking Innovation Conference, Crypto Finance and Blockchain. The second panel is Hybrid Digital Customer Experience. In this panel, we're going to have Mr. Elias Tayeh, Mr. Abhishek Bhattacharya, and Mr. Roberto Capodieci. I believe Roberto is going to join in when he's ready, because he said he's going to be late with a few minutes. But until he's coming, we're going to start with Mr. Abhishek Bhattacharya. Sorry if I mispronounce your name. You can introduce yourself with a few sentences, and then you can start with your topic.
Sure, Stanislava. Thank you so much. Abhishek was pronounced very properly. I understand that the last name could be complicated, but that's great. So, hello everyone. Thank you for joining us here today, and thank you, Stanislava, and all the organizers to invite me to Asia Digital Week. I'll just quickly share my screen, and we'll cover my introduction there itself. Just allow me a second, please. Can you let me know, Stanislava, once you see my screen, once that is visible? Should be in a minute.
Okay.
Yeah, one second, right? Yes.
Yes, I see it.
Perfect. So, all right, thank you. Today won't be taking a lot of time. In around 15-20 odd minutes, I shall be sharing our specific experiences while building India's first agri-fintech blockchain platform, of course, but it is right now India's biggest blockchain network. We have, why do we say so? Because we have over $500 million worth of commodities tokenized on the blockchain platform and making it the most in a production level system as of yet. What we have built is, which is called World. It's an integrated platform, blockchain platform that helps farmers avail warehouse receipt finance. Everything about that in a minute. As a quick introduction, I'm one of the co-founders at World. I have past experience with product roles and especially blockchains in the last 4.5 or 5 years. Have been an author in blockchain, a regular speaker in blockchain itself. And right now, the main agenda for me as well is to take this technology. Might be complicated. We understand that blockchain is a complicated technology. But then we are trying out ways so that even segments such as farmers who may not even be the basic tech savvy, they are able to use something like this. And then they can gain a lot of privileges, which we usually see by using such digital systems. Earlier, this thing that we have built, earlier the process was completely manual, paper-based. One of the reasons why there were so many frauds and farmers used to suffer for days, 10 to 12 days to get a simple loan. Not anymore. Even if they don't have a phone, we have innovated in a manner that they don't face that problem. Yeah. So as I mentioned earlier, the agenda behind, the objective behind World has always been in two folds. Number one, to start with helping farmers and that particular segment, farmers, traders, agribusinesses, avail what we call warehouse receipt loans, which is simply the loan that they can take against their harvests when done in a warehouse, in a partner warehouse of ours. And that can be any commodity such as rice, paddy, soybean, corn. It's a seasonal business, so whichever happens when, the farmers can deposit in one of our partner warehouses. Another very big impact that we are able to create, which is where our selling point comes in, is we help banks prevent millions of dollars in very regular frauds in this warehouse receipt finance segment. What this entails is that in very common names, Standard Chartered, Citibank, ICICI, all these names have faced humongous frauds in warehouse receipt segment, warehouse receipt finance segment. By bringing this technology on blockchain, what we're able to do is curb all those borrower related frauds from happening, and the banks can commit business safely. And with that, we are actually globally the first such agri-financing platform on blockchain, and Asia's first and the only asset-backed lending platform. For someone who might not be aware what warehouse receipt financing is, as it's not a very common kind of a fintech product, financial product. So a quick run-up of that. The warehouse receipt financing is when a farmer harvests their own produce after the season. They then find a warehouse nearby, near to their home, and they deposit that that commodity in the warehouse. Now they have two options. They can just deposit it in the warehouse, and they don't have to do anything else. But the best benefit comes out of this process is when the farmers need interim capital or interim financial assistance. That is when they can use the collateral, use the commodity as a collateral and take a loan from one of the banks that offer this kind of loan. So when they do that, they basically, after depositing, they get something called a warehouse receipt. This is where we brought in blockchain. In our entire system, this is where blockchain comes into the picture, and then everything gets streamlined. Earlier, this used to be a paper-based warehouse receipt, and hence frauds and fake receipts, all of these were very, very popular, very common. So with this, they take a loan against that collateral, then 3 months, 6 months usually. The agenda behind this loan is that, as we all know, it happens in every country, every geography. Right after the harvest, the prices of the commodity, the prices of the produce is at the bottom lowest. It increases as days go by. So possibly after 2.5, 3 months or 1.5 months, they would be getting much better rates for their 1,000 quintals of rice, for example, than what they were getting right after harvest, which was pennies on the dollar at that time. So that is why but many farmers in India, especially, we are India, currently based out of India. In India, especially, millions of farmers commit suicides, have committed suicides in the past. They do so because, number one, they might not be aware of this kind of a model, or if they wanted to avail this kind of a model, this was earlier very trader focused, not farmer focused. We brought it in a fashion so that the farmer is in the center of our entire ecosystem. That's our main customer. And we've made sure that they can avail this kind of a financial assistant in the most easiest fashion. And we have to make sure that the banks are ready to give those loans without having the fear of frauds. So that's what they do. And eventually, when the rates in the market are better, they sell off their, repay the loan, they sell off their commodities at better rates, and then they're happy. So that's what this model works. This has proven to give an increase of up to 30 to 40% in the income of the farmers easily, which is humongous for such a segment. Now let us try to understand, which is where we will see that where does blockchain help exactly. We brought blockchain into the picture. Definitely, we could have done that. We could have given loans to farmers without the use of blockchain. Where does blockchain help specifically? So as you can see the names here, these are very popular names, and these are very well-known frauds that have happened all across the world. Billions of dollars, as you can see, and the years, I have not written the years beside them, but I can tell you NSCL scam, I think 2016 or 17. Before that, Standard Chartered, the Qingdao scandal 2013. So every year, 13, 14, 16, 17, 19, 20, all these years are included here. So it's almost every year that some sort of warehouse receipt scam happens. Very, very common. Some banks, even that we've met, some banks have even stopped lending in this segment because of the frauds that they faced. They could not consume that fraud. Another big problem is that the current paper-based system entails a lot of intermediaries. Farmers face the problem again with this. When the intermediaries increase, the ultimate cost of lending for the banks increases, or the cost of borrowing for the farmers increases as well. Again, something that smallholder farmers, less than 3 hectares of land, can barely afford. Also, the low grassroots impact, as I just mentioned, that currently, even if farmers know about this warehouse receipt financing, they're not able to consume the benefits because it is very much focused on the traders and not at the grassroots level of the farmers. I'll quickly go through, won't spend a lot of time on every point. We can take questions later. So this is how we bring in blockchain. This is the solution that we provide. With our platform, the immediate step where blockchain comes into the picture is where we have removed the paper-based warehouse receipt and have put it onto the blockchain. This solves it all. This solves the puzzle because this is where the receipt goes onto the blockchain, and then every other transaction happening on the receipt is visible on the blockchain, and hence we are able to protect frauds 100%. This warehouse receipt becomes tokenized, which means that it becomes easy to lend against that receipt, and also to sell that receipt in the future on a digital platform like ours again. All of it is smart contract driven. Starting from the warehouse receipt, then comes the loan application against one of the receipt, the loan disbursement that happens, which goes to the farmer. Then comes, if the bank wants, before giving out the loan, it wants a third party to take a look and create a report of the commodity in the warehouse. They can appoint a third party for the same who generates a report like this. That also goes onto the blockchain network. Then the loan happens, which goes onto the blockchain network. Eventually, the farmer repays the loan. The farmer takes delivery from the warehouse and then sells it off in the market. all of these transactions are recorded on the blockchain platform. I won't be able to show you the Explorer today, but our stakeholders are able to anytime tune into our Explorer, and they can visualize where a particular receipt is in its journey, in its life cycle. The mobile lending part happens completely on app. But then again, we have innovated in a manner so that, as I said earlier, that we have made sure that we do not ask the farmer to change their core behavior, which they may have followed for years now. We have not asked them to change their behavior. If they are tech savvy enough, if they're good with using mobile phones, they can do so from the comfort of their home. Takes a one-click process, just like we would apply for any such like a credit card we might do these days. It's as easy for them to apply for loan via the app. If not, anyways, they have to visit one of our partner warehouses to store the commodity. That's not virtual, right? So they have to go to the partner warehouse. They can request the warehouse in charge, the warehouseman, to help them on their behalf. We just have certain security protocols in place so that the warehouse in charge does not create loan applications on behalf of a customer without the customer knowing. That's a set of protocols that we follow for the banks to be sure about it. Otherwise, it's very easy for the farmer to avail that benefit from the warehouse itself. For the first time, we brought them loans directly in the warehouse. We saved them 10 to 12 days of running from post to pillar at banks. Those 10 to 12 days are not just painful for the farmer, but also very, very important in determining whether this is a product that would be useful to the farmer or not. It's not like us that, okay, we need a loan, we can take it after 10 days. They are in dire need of the money and they are just waiting for the harvest to happen. If after that entire cycle extends by 12 days, that's a humongous loss for them. They cannot work on the field. They cannot sell it in the market. They have to stay put, but the money is what they need. That is why we brought instantaneous, near real-time loans for the farmers directly to the bank account. Sometimes they even have not reached their home from the warehouse and they receive an SMS message that congratulations, your account has been credited with the loan amount. And finally, we built a commodity trading platform. India passed a bill, an act, which gave farmers the ability to trade their commodities across the country, which earlier was not possible. There were certain limitations to it. Certain market boundaries were designated. But this bill act gave them the freedom to sell their commodity anywhere. But sadly, a lot of protest has happened against that. And it has been put on hold. That is why we have launched this commodity trading platform, but we also put it on hold unless our Supreme Court clears it. But then again, once this platform is live, this part of the platform, this would cover the entire life cycle of someone like a farmer. They'll start from our app, they'll deposit the goods, they'll take loan against it, and eventually they'll be able to sell it on our platform without even worrying about visiting the warehouse even once in the entire process. Quick look at what we offer to the banks, because there was a substantial stuff that we offer to the farmers. And for the farmers, they are not our main customers. They are our end user, but we do not charge them. This entire platform is free for farmers and traders and agribusinesses, the depositors. We earn from banks. They are our main customers, and we help banks with not only fraud reduction, but we also help them increase the lead generation. We also help them do an automated underwriting, which takes their costs to a bare minimum. Lending costs, their lending costs are very low, helps provide them to the farmers. We help them with customer acquisition, and we also help them provide receivables finance and collections to the farmers in advance. Quick look, and if any one of you have any question, please do put in the chat so that we can pick it up right after this. This is how the entire platform works. We have a clear demarcation between what lives on chain and what lives off the chain. The farmers, the mobile app does not write to the blockchain network. It is separated. The farmers do not interact with the blockchain network directly. However, when they fetch any details on the app, the read definitely happens from the blockchain. That is one of our USPs, that wherever you fetch our warehouse receipts, which are not public, but if you're accessing a warehouse receipt, if you have a paper-based printout of it, it will have a QR code on it. That QR code is a USP. Whenever you scan that QR code, you will be fetched a receipt with all the details fetched directly in real time from the blockchain network. That is how banks are sure that, which earlier they used to face a fraud in, that many a times the receipts were fake, or another critical fraud problem is that the banks face the problem of multiple loans on a single receipt. So say, for example, I'm a farmer or a trader, I take my receipt, take loan against that same 1,000 quintals of rice in the warehouse. I take loan from bank A, and then I go to bank B with the same receipt, and then I take loan. But now what the banks do is, even if they are not on our platform, even if they are not our direct customers. Still what they can do is still they can use this feature of our product, of our platform, is that in case they have access to a paper-based receipt and the farmer is asking for a loan, they can still scan the QR code, and it's as easy as scanning on a phone. Anyone can do that. And they'll see that whether this particular receipt has an active loan on it or not. Has it already been delivered? I mean, is it that the receipt says that the commodity is in the warehouse, but is it actually that the farmer has already taken the delivery from the warehouse, out of the warehouse? All of this is accessible. Apart from that, the entire set of stakeholders, such as the warehouses, the banks, the collateral managers, who are the third parties whom banks can appoint for that quality report on a particular set of on a particular commodity stored in the warehouse. All of them have web-based panels to interact with our platform, and they are able to use it, and hence the farmer does not need to travel to every stakeholder, especially the bank. Towards the end, this is where we stand today. Before that, I really wanted to cover one thing. Let me see. Before that, I really wanted to cover this, that this is currently, we are doing agri-financing on blockchain in India. But our platform has not been custom built for just agri-finance. It has been custom built for any kind of asset-backed lending. If there is any kind of asset which can have against which banks or financial institutions lend, that can be incorporated on or integrated on a platform as easily as is an agri commodity like warehouse receipt finance, this product. That is why now we are exploring partnerships with a couple of Southeast Asian countries. Then there is US. We are part of an accelerator that gives us access to some partnerships in the US. Then there is South America, especially, where we are exploring partnerships with Colombia. So all these areas we are exploring partnerships, not for warehouse receipt finance, but for asset-backed lending, whichever the commodity or asset that would be suitable in that particular market, where the need would be high, where the frauds would be more as compared to any other commodity, where the banks would be apprehensive about giving out loans in that particular commodity. That is what our target market would be. So that is why this blockchain platform, world's blockchain platform, is India's biggest blockchain platform, currently handling warehouse receipt finance. But that is a commodity that we have chosen in India because that had the best case scenario, that has the most frauds, that had the best impact that we could create in a segment like farmers. In India, we are expanding to other states. Whenever we are expanding to other countries, which we are going to do very soon if we are not hit by COVID. In the first wave itself, we were not hit by COVID because harvesting never stops. COVID was not a climate problem. So harvesting continued and our deposits continue to increase. So we were not hit by COVID at that time, but currently also it's very bad out here in India. But unless otherwise, we have a constant plan of going out within Q3, Q4 of 2021. And that can be any asset, any organization, any kind of partnership. If you believe that you have a use case, we are happy to explore. So lastly, this is where we stand currently. We are across 1,400 warehouses in 5 states of India. We have over $500 million worth of commodities on the platform. We have already a commitment of over $330 million of lending to be routed via our platform for the farmers and the traders in the country. And we have already given, in the last 5-6 months, we have already given over $1 million worth of loans. India's topmost business school, IIM Ahmedabad, has published a case study, has built us out in the shape of a case study, which is available online. And currently we are working with government, with banks, with credit bureaus in trying to create a credit profile for farmers, which is not available otherwise, hasn't been ever. And we have been recognized by Binance, by ETH Denver, and so on for our efforts in this segment. So that's all. Please, any questions, I'm happy to take. Otherwise, we are looking for partnerships, any kind of organizations like banks, governments, or in any other geography where you believe that this is a product which can prevent a lot of frauds, which can help a segment like farmers or any other borrower segment. Thank you. Stanislava, I'm happy to take questions.
Hello there.
Hi.
Roberto, sorry I arrived late because the been changed. My calendar has now been updated accordingly. So yes. I'm very religious in following the calendar precisely. So here I am, and I have a couple of questions for you. I apologize not being there to introduce you too. It's really, because I think about farmers. Farmers tend to
Robert, I lost you. Could you come again, please? I think my internet connection was bad. Could you repeat? Can you come again, please?
Yeah. Can you hear me right now?
Yes. Yeah.
All right, fantastic. So yeah, what I wanted to say is this: blockchain is a quite complex technology, right? And the farmer, as we know, most of the time are not super well educated, so very few people come out of university and go farming, right? So is this combination something that can work, or what are the problem you meet in these terms?
Right. Very good question. In fact, this is exactly what we were, we were thinking a lot, and we were thinking that whether we will be able to make this technology or make our product running on this technology reach the farmer segment, because we were very sure that the farmers will not be able to use this. But contrary to our belief and popular belief, we were astonished to see how, even though the farmers were uneducated, but nowadays they have started using, at least in India, I'm seeing that they have started using smartphones. They are using YouTube, they're using apps like TikTok and others for those short videos. And they're very, very much have become, savvy with smartphones. So when we brought them this concept of, just open an app, you just deposit it in a warehouse, you find it, it's very easy, one step. We made sure that our app is very easy to navigate. Of course, it's meant for that segment. But when you're able to do it, there is one click process and you're able to apply for loan. And by the evening, you're able to see that, the money is in your account. This turned out to be very successful amongst the farmers, even though we designed a manner that they can take help from one of the warehouses directly in physical approach. But we are finding ourselves that the farmers are preferring the app more than the other option that was easier for them, which was available in the warehouse. So this is definitely doable. And nowadays, I was discussing with my own university and other companies where they are trying to see that whether this kind of a combination can be good for blue collar workers or farmers or traders, and this kind of segment where the education might be a bit low, but still whether this kind of an application can reach them. I hope that answers your question. But yeah, we were astonished to see how well they can use the product, and they are using it.
At the same time, how we can achieve that without changing the farmer behavior?
Yeah. So when I said that we did not want to change the farmer behavior, so of course, if you're using our app, you will have to change the behavior, because you are used to, as a farmer, you are used to visiting the warehouse directly and then dealing with the person physically, right? That is why we provided them this approach. And I believe that not 100% of the farmers will be able to go for this mobile first approach. So that is why this part of the system has to be there in place, so that they have another way to access the system, which does not need them to change the behavior. The app would be an extra for them. Whenever they learn to do the app, they can switch to the app. Otherwise, we have to. So for example, if you're in a different segment, giving out say credits or giving out just coupon codes or something like that to the farmers or blue collar workers, maybe you would still have to design it in a fashion like we did, so that they have another way to access the same platform like we do, right? Whenever they learn, they can switch to the app, but not everyone will be able to do it from day one. Yes.
Okay, and how is the future? How does it look like? Or is going to be financing with the token, or there are more asset, more market you want to extend to?
Sure. The entire future looks like, to us, it looks like that not only this commodity, in fact, and also we do not have tokens right now in our system. So I'll give you a better perspective here, which I did not cover in my slides. So now we are currently centralized finance. We are doing centralized finance. Our entire platform is centralized finance because the banks are the ones providing the loans. But now we are bridging the gap between our platform of centralized finance, which has a target addressable market of over $4 trillion. That's what the total lending market is in real world assets. We want to be able to bridge that with decentralized finance. That's what we are doing. That's what we have been recognized by Binance for. We came top 2 in their entire worldwide challenge. And now we are trying to do that, bring that to DeFi. When we bring that to DeFi, that is the first time that we'll be having a role of tokens in our system, where the farmers or whoever has an asset in India or anywhere else who is putting it on our platform will be able to take loans against it in an instantaneous fashion from a pool, as it happens in DeFi. And that would be in the form of tokens. But currently, because it's a centralized finance, so it does not have token involvement right now. The banks give the loans, but the future is very, very bright for the combination of CeFi and DeFi across the globe in multiple commodities.
Interesting. There are some questions that have been posted in the Zoom. Drago Indic asks, is this regulated as a bonded warehouse?
Yes, this is completely regulated. because in our entire network of 1400 warehouses, all of them are government warehouses. They are government recognized, and that's the most secure form of warehousing you can have in our country. Wherever we are going, we are trying to find out such regulated warehouses only, so that when we are pushing assets on chain, we are sure about their proof of reserve, we are sure about their authenticity and these things. So it is definitely a regulated warehouse, and we are looking for such partnerships only as of now.
All right. Yeah, the question says, as warehouses a duty-free zone or not?
So it depends. Okay, so it's again Drago's question, right? So I'll answer this live. So so warehouses it depends. It depends totally on the region. Currently in India, it is when we are only lending in India, and the farmers belong to the India as well. They're keeping it there. It completely comes under duty free. But then again, if the situations change and if we are opening cross border or any other portfolio of asset, then the things might change. But these warehouses inside the country will be duty free.
All right, there are two more questions. You can ask, was it difficult to build an agri-fintech platform on blockchain? What was the most difficult part about it?
Yeah, that's a very good question, GP. So it was difficult to build an agri-fintech platform on blockchain. Definitely, it was. Even the choice of blockchain that we maybe did 2 years back before starting, that was even very crucial. And we use Quorum technology. We were happy we were able to zero in on Quorum, but that was a difficult thing. And the most difficult part of it was actually to design the solution, not the blockchain part. The technical part, we are good in technical anyways. That was not the problem. The problem came when we wanted to design this, as I was explaining to Roberto, that we wanted to design it in a fashion so that it's accessible by farmers. Now, for example, we cannot assume that the farmers will be able to, sit on a laptop, open MetaMask and interact with a blockchain, right? That's something that we had to go around the problem. So that's why that was the most difficult part. So it's a combination of front and back end technologies where farmers' wallets are currently being managed on platform. But they do not have to do something like MetaMask and all to interact with the blockchain. But then again, the way it's authenticated, that's not a problem. So then we could innovate in a fashion. We could provide this functionality to the farmer. That was the most difficult part, not the technicals, but the design part of it. I hope that answers.
Okay, the last question from Rakto Todev asks, how many % of farmers' earning can be incremented with this agri-fintech platform? So yes, how much more money the farmer are doing?
Yes. Yeah, so that's upwards of 35 to 40%. Research says that, and we can see that even if we estimate when we do, a farmer earlier used to spend a lot on first of all the waiting period. Then they used to spend a higher percentage by taking it from money lenders. I'll tell you the difference. We are currently with just one partner on one of the partners is giving us loans at 9% per annum annualized. Farmers in the past and even now who are not aware of our platform are not availing it from us via us are paying upwards of 20-25% as interest annualized instead of 9% which our platform offers. So that's when you use something like this, the cost of lending for the bank goes down. When that goes down, the cost of borrowing comes down automatically. And research says that it can give an increase of up to 40% in the realizable income of the farmers. That's where we see it. Definitely a lot of that's a huge number, 40% increase. I'll tell you also why, because otherwise if we compare it with them selling their produce right after the harvest in the market, that's basically, I told you, it's like it's like pennies on the dollar. So when they are selling it 2.5-3 months later, when prices are better, that anyways increases their income. And that's a huge amount for them. 40% is a huge amount for them.
All right, fantastic. And thank you. Sorry, thank you very much for your presentation. I'd like to move on to Mr. Elias Tayer. He's an international consultant. Oh, I apologize. I promise it's not Corona and it cannot be transmitted via Zoom anyways. He's an international consultant in Fintech. He's from Lebanon. He is an expert in financial technology, electronic payment services, oh my God, digital payment, electronic distribution, microfinance, telecommunication. I apologize. Sorry, I need to sip a bit of tea. Okay. I would say, and technology markets in general. Qualified with an MBA in International Business from the University in Liverpool, UK, and a Bachelor in Computer Science. Elias obtained certification in FinTech technology from the University of Hong Kong in China, International Organization MBA, from the University of Geneva in Switzerland, political economy of institution development from the Leiden University in Netherlands, and a certification with honors in financial markets from Yale University. This topic in this presentation is the importance of CDBC in a post-COVID-19 world. Okay, so if Elias wants to start the presentation, and then we're gonna have some questions for you at the end. Thank you.
Hello, everybody. Thank you, Roberto, for this throughout introduction. Actually, the subject is going to be the future fintech business positioning in a post-COVID-19 world. I think you are still referring to the subject that we discussed in a previous event. But anyway, thank you again for the introduction, and I would like to thank also the organizers of this Asia Digital Week 2021, especially Ms. Stanislava. Thank you for the opportunity to be here. I hope you all remain entertained at all times during this session. We had great panelists today, and the topics were wonderful, a very vibrant event. So again, the topic that we are going to address today is the future of the financial technology business positioning in a post-COVID-19 world. And I chose this subject because what COVID-19 represents for this business is a disruption event that has affected the business in different ways. But anyway, so before we dig right in the subject, let's try to understand the wider landscape of what has happened during this period. We all know by now that COVID-19, it created a buzz in the world on anything digital. Basically due to the repetitive lockdowns that forced the populations around the world to resort to alternative solutions and services that they could use to ease their basic financial life needs during this period. Even some of the during this period, the reported information on particular on how this fintech industry was affected by COVID-19 was well founded. There are some empirical studies that surfaced recently that covered this subject at length, and some of the information that we are receiving are just of marketing nature, not necessarily in the positive sense of the word, unfortunately, but in all cases, this pandemic has impacted the provisioning of all financial systems across the globe. So the disruption was at all levels, like I mentioned earlier, positive and negative. Some financial technology companies were able to do some growth, and some of them were not able to cope. We should also mention that the disruption affected the B2B sector, not just the consumers or the B2C model. So the question of business positioning in a post-COVID-19 world, or in a post-disruption, an urgent event that has happened, becomes not just valid, but urgent, especially for startups and young enterprises, whether they are running a B2B or a B2C business model. So what would they do when such disruptive events happen, and how can they plan for it, for example? Or where would it be best to be positioned in order to survive or to thrive, to grow during such events? What could be the lessons that we could learn from these success stories or the failure stories? During this period, I was fortunate enough to discuss the subject with some of my clients and some of my friends operating fintechs in the region. And we tried to navigate this period roughly. Sometimes we were able to reduce the risks and reduce the effects, and sometimes not. But what we always try to convey to the people leading these fintechs is to evaluate which lessons could be customized and applied to the market where they operate. There is no mainstream rabbit in the hat solution for everybody. You know, there is no magic in this. They have, when you are in a leadership position or in an executive position, trying to lead a fintech business in such a disruptive world, you have to be picky and unique. You have to be innovative. So if some fintech resorted, for example, to physical cash while they are trying to avoid the cash, or even to go to physical agents to be able to serve their customers and restore their financial cycle, that doesn't mean that this can be the solution for everybody. But when a disruption happens, you have to be creative. You have to take the lessons that could suit your business and the need of your clients. We also try to convey the message that they must have a good understanding of the competing forces. Not just the event itself, the COVID-19, the disruption, the lockdowns. They have to adapt and adapt to what happened, and adopt quickly and swiftly new approaches and the right approaches, to adopt the right approaches, not just anything that comes throughout the way, or somebody who is also in trouble, for example, tries to put the risk on somebody else. So they should be very careful because this can kick back on their customers. We also try to identify a differential advantage and to try to deliver it effectively. And by doing that, they had to observe the new trends in the life of what was going on during this period. There are many examples, for example, that were a source of innovation during the COVID-19. Because the logistics, for example, let's take, for example, the logistics world, how it was changed, and the demand, how it was changed. And even fintechs who were serving e-commerce platforms or wallets or digital payments, they had to go back to cash on delivery. So yeah, they had to identify this kind of trend that was going on and adapt periodically to it to be able to survive at least. One major thing that most of the fintechs that we work with were having problems with the regulations. So I always invite them to understand the regulations and how they could navigate them in stress times, because they don't have enough time to change these regulations. Even in Europe, there was an invitation for the regulators to ease the PSD2 regulations. But this is not going to happen overnight. And when you have a business model going on, you have to navigate. You have to understand these regulations and how you could manage your company during these stress times, even if the regulations did not change. I would like to talk about our region of Asia, the MENA region, and why this business positioning matters for us. The Middle East in particular, which is part of the MENA region and part of Asia, we have the biggest young population in the world and the biggest unbanked population just as well. You see the contradiction. So fintechs have been paving the way for serious alternative solutions, not just as a disruptive business model, but as an inclusive business model, especially for millennials who have different needs and seek different approaches. This was happening slowly, but steadily. So the fintechs working in this kind of environment, they had to be proactive and innovative. Most of our financial decisions are of emotional nature, or the background is emotional. And who is more emotional than youngsters? So on another hand, they had to be agile with lean approaches to sudden market changes. Because, like I said, if you are serving a young population who is emotional, under stress because of COVID-19 and all this disruption, and you make sudden changes that doesn't make sense for your niche market, or even for the wider market, if you are not able to be lean and still offer what the consumer asked in the first place, then you are in trouble of losing your base, your customer base in the long term. Probably it would be understood for now because there is a situation, but you have to be agile and you have to come up with lean approaches to be able to maintain the current situation within certain limits, and later on plan for the future without losing your customer base. We also advise on offering inclusive or even embedded solutions and services, not just to be the alternative, like I said earlier. Sometimes a fintech can offer so many solutions without being at the forefront of it. And that's fine as long as it generates quality for the business as a whole. Sometimes branding is the business itself, and sometimes not. So in a stress situation, it's okay if you are in the back, working from the back seat. It's not going to be like a complete business model changing, but like I said before, you have to adapt and adopt. So otherwise, you might be in a situation that you didn't plan for completely. Anyway, we'll give examples later on during the Q&A session. So another thing that we always try to convey to the people that we work with is to be prepared for the digital transformation at all levels, with the disruption, with COVID-19 or without them. From day one, the concept that you are going to put in front of your customers needs to be in a way sustainable by concept. You have to know your market and your market needs. These needs might change and the market might change, but at least if you know your positioning, then you would know what you can do during these disruption periods. And you must know your technological capabilities. This is very important. If you are working on a solution that you are developing with something in mind, and you didn't take care, or you didn't look at the bigger picture of what might happen in the future, even on the short or the long term, then you are probably not well prepared enough. If your technological capabilities are limited, then you are limiting your capability to react to this kind of changes. We always try to, as much as possible, because this is not going to be the case for everybody, like I said, but even from day one, from the team, when you are building your team, you must know your team capabilities. Each one of them, how much is probably willing or even capable of adapting to a new situation, and how much time they need to do that. So knowing the human resources in general of any fintechs, even if we are talking about a team of 5, 6, 10 people, it's still the same case. If your team, friends, or whatever working with you on this venture have limited capabilities, then in a disruption situation, you might be in trouble. The other thing that is very important during sudden changes is to know your competitor capabilities. If they are able to react faster than you or your company, then you are also in trouble. So if you have at least a kind of knowledge of what your competitor can offer, then probably you can either react or even plan for it ahead. I know this is not easy. Sometimes it's very costly, time consuming, but at least if you put it like, it's a mindset thing. If you put it in mind, at least you would be prepared emotionally to react. Otherwise, disruption might happen. The next thing that might be very important for business positioning for fintechs during a disruption period like the COVID-19 is to try to forge long-term partnerships on all levels, vertical and horizontal. If you have strong partners or partners that trust in your products, services, in your team, then they would be able to support you during these kind of periods. Probably they would be in a position that they need more of you. So forging these kind of long-term partnerships is also key for both, for the partner and for the entity. And at the end, from the let me say, most of the recent studies, the serious ones with empirical data that came out, we found out that they had a major problem closing the financial cycle, especially when it comes to cash in or cash out at the agent level, at the bank level, at an ATM. Even working cash flow was an issue for most of the fintechs that were suffering during this period. So our last, and this can be an advice for all times, always keep a lot of cash on the side, if possible, or at least plan for it, because if you have liquidity at hand and whatever happens, even if the disruption is positive and you need to grow fast, you need to respond to somebody who has called you and offered you an opportunity to do something that probably was not in your plan, and you want to jump in on the opportunity and you don't have enough liquidity of enough cash, then you might be in trouble. So always keep a lot of cash, or always keep an open door for somebody who has cash for this kind of situations. Yeah, I think I have covered these. I will leave the examples for the Q&A session. Thank you so much again, Roberto and Stanislava.
Thank you, Elias, for the presentation, and apologies for getting the wrong introduction again.
No problem.
My ex-personal assistant left a week ago. The new one is going to start Monday, and I've been abandoned in a week, and I managed to do all the disaster I could with timing and with the presentation. Apologies, never going to happen again. There are a couple of questions that have been posted by the public. I have a couple of questions for you.
Okay.
The first question is, what are the skills that will be needed in the future for startup in the fintech sectors in Asia?
From my experience on the ground with fintechs and startups, or even with existing ones trying to grow in Asia, especially in the MENA region, I mean by MENA, the Middle East and North Africa, but basically in the Middle East and the Gulf region, the skills that are mostly needed are soft skills. including learning languages, for example, negotiation skills, marketing skills. And you don't need to be a genius or to even hire somebody and give him like a load of cash to do that for you. I'm talking about the marketing in particular, because there are many fintechs. Hello?
Hello?
Yes?
Okay, so I thought because you ended in a way, I thought it was not completed with your answer. Apologies. How can Asian fintechs penetrate the global market tools then?
I'm sorry, Roberto, I'm losing the sound. I was talking about the marketing skills for the startups, right?
That's correct.
Did you
So
get that?
you were finished. Yeah. So my next question was, how can you? Sorry, go ahead. If you were not complete, please go ahead. We saw a pause, so I thought you were done.
No, I just want to give a small example on the marketing,
Sure.
something that doesn't have to be expensive or to have an outsourced solution or even hire somebody. If you look at what is happening in Europe, for example, from the concept, they try to address a specific clientele in marketing with almost no cost by choosing the name of the fintech itself, or by choosing the services and the products and to put them in the forefront before they even start. Take, for example, my French bank. It's a French solution. Instead of putting the wording in French, they come up and it's something for the millennials, for young people. And they used a sentence of French and English in the same sentence, my French bank. So this could go to Canada because people in Canada speak that kind of language. This can go to many Francophone countries. So in our region, we could use the same marketing methodology, even if we don't speak Chinese, or if we don't speak, for example, Arabic or whatever. These kind of soft skills can make a big difference. So yeah, your next question was about fintechs in Asia, right?
Yes, correct. How can Asian fintechs penetrate the global market? So conquer market outside Asia.
It's a mindset. It's a mindset. For now, I think it's the other way around, by the way. The global market is seeking ways to penetrate or force partnerships with Asia and the Asian fintechs. Revolut announced yesterday that it's coming to India, right? And many global fintechs basically that I know of are eyeing Bangladesh and Pakistan. So anyway, it's a mindset, because when you are offering a product, usually in the financial technology, it's global by concept. So they don't have to put so much energy on how to penetrate the global market, as much as they need to go back to the subject that we are discussing today and do the right business positioning, right? And when Asian fintechs understand the opportunity they have to serve the wider market, even when their markets are still young and they won't have much trouble penetrating any market. The technology is fairly competitive by concept. It serves the same purpose. So I think it's a mindset thing. They have to innovate with the word in mind. That's the whole thing. And we have been all using technology that is coming from Finland, from Africa, from everywhere. So some set of skills is going to be key, like I said earlier, and a lot of PR and marketing. And there's no lack on know-how. I think it's not going to be like a brain breaker to go and penetrate the global market. And with the current situation, by the way, with all these talks about the financial situation, the global economy, and inflation, inflation means there's a lot of money not generating money. So once the world opens, this money is going to move. So if the Asian fintechs can do a little bit of marketing or on what they are trying to offer, like the presentation that we have seen before, agriculture and GLT, that's wonderful. A little bit of marketing and they can attract investors and they can attract money to grow and to, you know, copy paste in different markets in the world.
Okay, interesting. There are two questions posted in our Zoom question answer. One is from Paulina Petrova, asks, what is the importance of distributing subsidies in the form of CBDC?
Yeah, we addressed this subject, the CBDC, in the African Digital Week. The importance of distributing subsidies, its cost, its time, and it's making sure that it's very inclusive. If you take the example of India, they had the infrastructure laid down before that. When they did the Aadhaar system back in 2009, they didn't know that COVID-19 was coming to hit, right? But when actually it happened, they were able to distribute a lot of subsidies to the Indian population through the Aadhaar ID card, using fintechs, using ATMs, banks, and whatever. They announced officially that they were able to save around $4 billion doing so. And they were the fastest country in the world to distribute subsidies to their population. So you see, even if they don't have an official CBDC, they use the existing monetary system to distribute these subsidies, and they were able to do that. If that was directly a digital currency that is issued by the central bank, which is called, by the way, the Federal Bank in India, I think, that would have been even cheaper and faster and more inclusive. That is the importance of it, in subsidies in particular. So the example of India is an amazing example for that, of what can be done if a central bank issues a digital currency in times of stress, in times of disruption, lockdowns, whatever.
Okay, in fact, I think between the line you respond also the other question they ask from Eva Toms, how CBDC could speed the financial inclusion rate.
This is a debate that is still ongoing. Basically, by concept, first of all, it's political. The legislations, once they are in place, we would know how it could speed the financial inclusion. But by concept, the CBDC eliminates all the medium parts. It eliminates time, it eliminates cost. So what is the financial inclusion? It's trying to reach each and every person in a certain country and put him on the channel, whereas he can enjoy some kind of financial services like credit, like subsidies or whatever. So when you have a government entity, or even if it is not a government entity, like the case in the United States, issuing a digital currency, by design, they should make it inclusive. And that is how it could speed financial inclusion. It's not yet clear because they did not respond to it properly yet in many countries, but in the countries where we have seen how and what they are trying to do, in Sweden, in China, in many countries, even in small islands around the world, because their economy is easy to manage and to digitize. The way they are designing this, it has a purpose. I know it's political. I know there are still many questions to be answered, but it has to speed financial inclusion by concept, because any way you do it, it's a digital product that is by concept, again, addressing everybody in the population. Otherwise, they wouldn't do it. So there is no particular answer to this question. But if you are going to drive a car, then you are going to drive a car at the end of the day. So you are not going to be walking on your legs. So by concept, it is going to speed financial inclusion by reducing the cost and removing all the layers, the middleman that basically takes commission and don't do anything.
Fantastic. Thank you for your presentation. And sometimes I think how crossing a border at the airport, we see this sign maximum $20,000 cash can be brought around. And I wonder when they're making all these things digital, how they can X-ray our luggage to find the millions of dollars that we don't have and that we are transporting over the border. It's going to be an interesting change in many aspects of life with the approach of this new form of money. All right, and now I think we can go ahead.
Well, I was just saying it's not going to be very soon. This is going to be a channel, not the main channel. Cash will still be there. So yeah, you can still put $20,000 in your luggage and travel, no problem.
Across the board. But it's interesting, when you have cryptocurrency, you actually cross the border probably with a lot of value without this being tangibly visible, and actually not physically being with you because it stays on the blockchain, right? So it's a very interesting change of perspective in how things are seen, right? When somebody bring a physical asset, there is even a banknote or a coin or gold need to be transported physically. Now that many things lives in an ethereal format, still having the value. Like a piece of art, people need to contraband a piece of art. And now there is an NFT, and people can transport the NFT through the blockchain in any country of the world. That's an interesting aspect. All right.
Yeah. Some of the people who are not so enthusiastic on this kind of digital transformation are saying their main point is that if you are going to be that not just flexible, transparent to our governments, then this would transform our governments to like a communist government. So that's why when I tell you it's political, because it's political. If they would know what kind of money you are moving, for what purpose, with who, at what time, in what bar or restaurant, or if you are sleeping at home, they would have a lot of control over your life, right? So this is one of the things that are still debating about, whether it is going to be trackable or non-trackable, the CBDC by concept, whether the government should have access to this kind of data or not. So yeah, you are right, absolutely right.
It's something to be seen. And in fact, on exactly this topic, I have my short presentation to share with all of you. Let's see if is happening the magic. The screen, my screen is visible.
Yes.
All right, that's fantastic then. Okay, so what I would like to talk, just to put it on the table as a topic of discussion, something to think about, is the topic of decentralization, right? So how many aspects of our daily life, is it finance or not, but is the daily jobs are going to move toward the decentralized manner. Blockchain technology is being adopted for non-financial use cases. We have heard a lot lately, everybody talking about NFT. NFT are the non-fungible tokens. Non-fungible token means that when I have a coin, I can exchange one coin for the other, and it's the same thing, right? But with this token, each token is unique. And so they're not fungible in terms of liquidity. And that's what is start happening. People start putting digital content or representation of physical content into this NFT and selling them. Is a part, in my opinion, of the evolution of the information age that we are into. Naturally, we started in a very fast way with the Turing machine by Alan Turing, that was the first computer, let's say. Then transistor came along, and we got the first modem. So data could start traveling around and not stay in a single computer. That has been the basis for the internet. And email has been the first transmission of actual content between people. And this made already a digital format of the letter. So we already just transforming information that were written into digital information. With the birth of the World Wide Web, for how we know it, with HTML, this was 1980, which is 40 years ago. That's quite a lot of time. And the evolution at the point has been all about web and digital information. Social media, people interacting online. But all this was happening and is still happening in most cases because there are central servers, central data center that are in the hand of a particular company, particular people, and they are controlling all the information that we post online. What happened later has been this step of making this internet magic money, which is the Bitcoin, right? And to do this, they needed to solve a problem of how get this thing to not be stopped and blocked. I personally follow decentralization since the time when torrent solved the problem of those other centralized distribution system of data, like Napsters, that were used mostly for illegal piracy of intellectual property. But while before they could access and stop the server, they can control these things. With the torrent being a peer-to-peer network where no central server control things, they managed to have a sort of living animal in the internet that cannot be stopped. So they resorting to taking people and get arrested hundreds of years for piracy. But the same solution that was there for torrent is being adopted by Satoshi Nakamoto to make a peer-to-peer network computer to manage a ledger of financial transactions. Now, with coronavirus, the technology has exploded because people have more time to stay home and implement new things. At the same time, the need of practical uses of technology for information is grown. I think who has shared into Zoom became much more wealthy very fast, right? And at the same time, these platforms need to be decentralized. How is the future going to plan? I have some ideas, but I'm not a fortune teller, so I have no idea exactly how the future plan. But my opinion is that the future is going to be decentralized. We're going to remove the central part of control of not only banks with decentralized finance, with cryptocurrencies, but also away from a central mail server where our email are subject to scrutiny, censorship, or central hosting for website or many other things. Social network need to be decentralized. It's happened to many people to be censored, banned, or blocked, or unable to read content from other in social networks such as Twitter, Facebook, and other. To say the president of the United States has been kicked out from a social network, which is a very interesting thing, beside if we agree or not with what he was posting. I think that the future is decentralized beside cryptocurrency. With the NFT, there is an adoption for the use of the centralized system like blockchain for something that are not strictly financial. So it's not a decentralized finance system, it's not cryptocurrency, is the trading of assets through a decentralized manner. Because the blockchain allowed the unicity, allowed to have a unique asset that cannot be duplicated. Because if you think about this, if I have an MP3 file and I give a copy to all my friends, we all have a copy of the MP3 file. But thanks to blockchain, I cannot give a copy of my Bitcoin to all the other people. The Bitcoin is unique because if it wasn't, it would not have any value, right? So the blockchain gives to the digital asset the possibility to be unique. Email, social media, website, messaging, data storage, and many other things, and also payments will be decentralized. And the reason are many. What is a trigger that make people want to decentralize things? Because there is the concept of them, they do, right? In centralized system, they decide what you can see, what appear in the newsfeed of your Twitter and in your Facebook is decided based on a particular algorithm. What you find when you search on Google is also decided for you. So you trust somebody else to make a decision for you in what you want to see, because you're not handpicking the content that you want to see. At the same time, what you can do is decided by others. They decide you cannot post anymore because they don't agree with what you post, and you're gonna stop posting. So this behavior, necessary for many cases, has raised a lot of people that is promoting decentralization to remove the central part to be the judge of what happened to them, to their own online life. As I mentioned, even the President of the United States got censored. Bank account get frozen for no reason. A Friday night, somebody wants to send money overseas, cannot, need to wait Monday, while with cryptocurrency 24/7, he can do that. And we all saw what happened to Robinhood and GameStop, where some large financial institutions were trying to short these small brick and mortar shops that sells video games, and they bought into short with a lot of shares, and an online community decided to actually buy shares to raise the price and put these people in trouble. And then the application that everybody was using, that is called Robinhood, which was born with Occupy Wall Street to be on the side of the user, to give everybody the chance to trade in the stock market, decided to help the situation of these investors that were shorting GameStop and block people from the application, the ability they could sell but cannot buy stock anymore. And this put a lot of pressure into understanding why somebody has the freedom to make such a choice, right? If the system was fully decentralized, there would have been no possibility to block people to do what they wanted to do. And pay attention, it's not been the stock market to block the trading, because there would have been a central decision that is authorized. It was a single application that decided their users were unable to buy the stock, just to help the investor that they had, because this investor also were shorting the company. That's a very interesting thing. So let's see, I made a very deep research, and I have a graph to show how much people care about decentralization in the past decades, right? In the 70s, not very much. In the 80s, not so much. In the 90s, a little bit. In the 2000s, they start caring about it. In the 2010, not only they care, but they start using it with Bitcoin and so. And in the 20s, we are in the phase to decentralize it all. I give you some example of what people is doing about decentralization, about the use of this technology of the peer-to-peer network in order to provide decentralization to many services that are offered online. Twitter, for example, is a very interesting things to look at, because Twitter is what they kicked the president out of their social network. They censored the president of the United States. Probably not because they were very happy to do so, but when they've been pressured to do so. Comes up that Dorsey, which is the CEO of Twitter, which just sold his first tweet for almost $3 million in an NFT, end up investing in decentralization in a project that is called Blue Sky. practically, he wants to do this. He wants the content of Twitter to be posted in a peer-to-peer network, and Twitter only offered an interface to read and post. So he has no control whatsoever on the content that is online. And this means that when authorities, Secret Service, whoever it is, goes to him and tell him you need to remove content, he can say, look, I have no control on the peer-to-peer network. It's managed by the people. The content is there. I cannot decide to delete things. And this is interesting because it's one of the biggest centralized social network that wants to get out of the situation they are into. Another that is worth to look at is the Chia network, because it's been created by the same creator of BitTorrent. BitTorrent has been one of the pioneers of applied peer-to-peer networks that had a large effect and became very large to let people share file without anybody being able to stop that. And now, probably with a lot of brains into how decentralization works, are building a network to bring the decentralization in many other aspects. Then there is this guy that is very hard to find anywhere. He's very anonymous, is French, and he created an application that is called DTube, is D.tube, and is the decentralized version of YouTube. So anytime YouTube block, because being centralized, YouTube is in the position that is a place where people can go and say, hey, this music cannot be used in videos. Hey, this content is fake news. Hey, this we disagree with because as a political view different from us and the jurisdiction where you're staying, you cannot post it. In a decentralized format, you can post everything. I had a funny video of my daughter singing, lip syncing a song, and in YouTube cannot be posted. In the tube, being posted perfectly. This means that there is a decentralization on system that are largely used centralized, and it works very well. It can be YouTube that become DTube. It can be Google Suite, become a decentralized Google Suite. It can be many other things as the time goes by. And to finish, we have something that to me is the base of decentralization, right? You can decentralize service, but what need to be decentralized are the protocols, are the system of communication. So personally, I am in a long journey toward decentralization that started already 2 years ago, implementing something that allow decentralization to take place. Because a lot of things that are decentralized now use technology that were not meant to decentralize the whatever, were meant to do decentralized finance, remittance, because the blockchain is born to support coin movement, and is all security and all mechanics are based on the value of the attack, the cost of the attack, the value of the coins. So there is a need also of a new bottom layer technology that goes to decentralize even the access to the internet. There are mesh networks that allow people to connect to the internet in a decentralized manner. And in fact, it is a person here, Henry Wang, which I know personally, is working since many years to create access to the internet in a decentralized manner. So at home, rather than have the modem that connect with our ISP, we have a box and we are one node of the internet. So people can connect and we are just part of the data storage, part of the infrastructure. So those are the different kinds that are, different things that are being done that are happening to decentralize all the things that eventually create a base for tomorrow having a decentralized online experience. The solution for most of this decentralization is, in one word, blockchain. Actually, no, decentralization, because there are other means to make decentralization, or I would like to say maybe decentralization via blockchain, using blockchain. Now, my presentation go ahead much longer explaining a lot of technical aspect of decentralization, but I'm gonna stop the presentation here. And I would like to answer some of the questions that are coming in, and I'm open about getting other questions from people. Vanya B asked, what makes a blockchain secure? And that's a very interesting question. So the security of blockchain is a little bit mythical. There is the myth the blockchain cannot be attacked, cannot be compromised. It's not really true. The security of a blockchain, I would say more of a peer-to-peer network, stands in the code that determine the way the node behave in front of different choices, right? So because a peer-to-peer network is a network of many nodes, and the idea of a consensus that we have in our mind between humans, a consensus means we sit at the table, we decide where to go dinner tonight, we discuss, we reach a common decision, and we go to dinner at the particular restaurant. In a peer-to-peer network of nodes, the nodes don't sit at the table to discuss. They are presented options, and they need to make a decision that they know all the other nodes will make as well. So there is a part of code that says in front of this option, run these rules and end up with a decision. If all the nodes have the same rules and the same option is presented to them, they will make all the same decisions. So in fact, 1,000, 2,000, 10,000, 1 million nodes move ahead doing the same thing. If these rules are not written properly, they can be gamed and people can take advantage. One of the classic attacks in blockchain is the double spending. So the possibility to spend money twice. And has been done a lot of time. It's not true that it never happened, right? It has been done early day on Bitcoin, has been done much more recently in Ethereum Classic, because the system, the Win design, were not perfect. Most blockchain are not exempt from being attacked, but it's very expensive to attack them. So when in the balance, the cost of an attack is more of what somebody can get out of the attack, then people don't spend the money to do the attack. But doesn't mean that they are secure 100%. So if it's a matter of principle, people can still attack and spend the money to do so, even if it doesn't get back more of what is spent. There is the need to make this technology better, and there is a lot of people doing good job and work toward this direction. Our approach is the one to make the security of the blockchain related to the participation in the blockchain and not to anything financial. So we don't go back to the point that people with money has more power and people with no money has no power. If the centralization system, technology for decentralizing, is there to protect things that have no financial value, there must be no financial means to perform an attack to change the outcome of the rules of the blockchain. So blockchain are not 100% secure. It's very expensive to attack them, and they get attacked when the financial outcome makes sense. How can we choose the right platform for a decentralization project? And this is a very good question, because the right platform has to be chosen for many reasons. For example, Ethereum with the smart contract is a fantastic tool, but the fees are so expensive that doesn't make any more sense to do projects that need to be sustainable into Ethereum. So people create clones of Ethereum, people create other system, but the mechanics is there for which eventually, if there is a lot of use, a lot of requests, the cost to do transaction is gonna go up. I suggested to look into ZooBC or DECBC, that is our project, not much for a commercial aspect, but to read and see how we approach the mechanics of security, because we believe we did something that is very powerful and innovative and is addressed for non-financial functionality in decentralization. All right, so this is very much what I am happy to share with all of you. And if there are some more questions, I'm happy to take them. As I pass it back to Stanislava. Thank you very much.
Thank you, Roberto. Elias, Abhishek, Thank you very much for your time and for sharing your experience with us and with the audience. Thanks for answer the questions. Your topics was great. I want to take to all of our supporting organization that make us more than welcome in Asia. I want to thank to our sponsors, Stamdix, Tendrik. I want to thanks to our partner for the Expo Zone, Neosoft, again Tendrik, and I hope we'll see you again in Asian Digital Week 2022. Great speech of you again. Thank you for being here, and have a nice day. This is the last conference of Asian Digital Week, and we're going to proceed with our next events. You can see them on the main site worlddigitalweeks.com. Again, thank you and have a great day.
Thank you very
Thank
much.
you.
Bye.
Thank you.
Bye.
Bye-bye.
Thanks,
Have a
thanks.
nice
Bye-bye.